I'm Lauren Hayes for the Finance News Network, and today's episode of Stock Watch looks at Tamboran Resources. Stock Watch highlights compelling market opportunities and provides a unique conversation with company CEOs and research analysts. Tamboran Resources is a natural gas company focused on developing unconventional gas resources in Australia. We're talking to Tamboran's Managing Director and CEO Joel Riddle about the company's project in the Beetaloo Basin, and Corporate Connect's analyst Richard Close, who has put a $1.10 price target on the company. Joel, welcome back to the network. Firstly, what makes the Beetaloo Basin so compelling for Tamboran?
Look, the Beetaloo Basin is one of the largest untapped gas resources here in Australia. Over $300 million have been spent into the basin to date. And what those wells have shown is a shale that looks very similar to the Marcellus shale, the most prolific shale basin in the world. So first thing that really attracts Tamboran to this opportunity is the quality of the rocks. In addition, it's all about the scale as well. So the gas sitting in the Beetaloo Basin is enough gas to supply the domestic market in the east coast of Australia by more than 200 or 300 years. So a tremendous amount of gas sitting in the basin that has this potential to really answer a lot of the gas shortfalls that are emerging.
What does your US oil and gas industry expertise bring to drilling at the Beetaloo Basin?
You know, myself and my operating and technical team indeed have a lot of U.S. experience and very specialized experience. Our guys have drilled over 5,000 shale horizontal wells in all the key shale basins in the U.S. And what that experience really points to is our ability to drill wells faster, being able to design our wells to have very high production rates and recoveries per well, which translates, into great economic value.
TBN's shareholder register includes the likes of US oil and gas billionaire Brian Sheffield, who's also a JV partner. How did this strategic investment come about?
Look, Brian is someone that we've known for quite some time. He's very well known in the US through his successful early stage business, Parsley Energy, that was, very, very successful in developing the Permian area in Texas in the U.S. And so through our networks of both myself and our chairman Dick Stoneburner, who's based in Texas, we became aware and developed a relationship with Brian over the last few years. What attracted, I think, Brian to this opportunity is the quality of the rocks, the potential to replicate this high growth business plan that he was very successful in implementing in the Permian Basin. And we couldn't be more excited to have Brian both as our largest shareholder and also our JV partner.
Another strategic investor of Tamboran from the US shale gas industry is Helmerich & Payne, who are the largest provider of onshore drilling solutions in the US. This will give TBN unprecedented access, in Australian terms, to high-power drill rigs. Can you talk more to this strategic value?
Yeah, Helmerich & Payne, as you mentioned, is the largest rig provider to all the large shale operators in the U.S. But importantly, they are the most technologically advanced rig company, and so they're currently producing one of the most technologically advanced rigs, in worldwide. It's called the Flex 3 rig. This rig is over 2,000 horsepower. It's going to include a 1 million pound hook load. To put that in perspective, that's about 80% more powerful than the largest rig currently working in Australia today. And these rigs will allow us to drill much faster wells and more cost-effective wells. And so it'll be key to unlocking the commerciality in the Beetaloo. In addition, this will be the first of 5 rigs that we'll be working with H&P on over the next 3 to 5 years as we ramp our production rates up in the basin. We have potential, we think, to produce over 1,000 TJs a day. Having the right kind of equipment that can drill wells fast and efficient, and having that backlog of additional rigs is really the key to being on the company's ability to ramp up gas production as quickly as possible. So we couldn't be more excited to have H&P as our strategic partner. In addition, they invested $22 million into our recent capital raise, so they have very strong alignment with the company as it looks to grow over the next few years.
Joel, thank you for your time. Richard, welcome to the network.
Hi, Lauren.
Firstly, you have a 12-month target price of $1.10 on TBN, which is significantly higher than where the stock is currently trading. How did you get to this valuation?
Okay, so it's a fair question. It's a big target price. So, I mean, we're over 500% from the current share price, and that's probably quite unusual in this day and age. But I think it should be borne in mind that the Beetaloo Basin is a big prospective project for Australia, and Tamboran holds the major position in that basin. So the valuation is really based around the NPV valuations of 2 components of Tamboran's stated strategy, which is number one, their 100 terajoule a day pilot plant, which they want to get in operation by 2025, and then a much larger LNG export project, which will encompass, I guess, a full field development across the Beetaloo Basin. So risking it appropriately for chance of commercial success, we've got 35 cents a share for the pilot plant and $1.12 cents a share for the LNG development. And that's been discounted back to today. The other 2 components, or significant components of the valuation, are their other exploration permits. So their 25% working interest in EP 161, which they hold alongside Santos, who is the operator, that we have around about 37 cents a share for that. And then EP 136, which is the 100% owned permit, where we have a valuation of around about 97 cents a share. So in the context of the stock trading around about the early 20 cents a share at the moment, you can see these valuation of even all four projects are pretty significant.
And where are the risks to your valuation?
Yes, Lauren, there will be significant risks over time. And obviously, the primary one in my mind is going to be commodity prices. Commodity prices, particularly energy prices, over the last 18 months have been incredibly volatile. And I think you've always got to have that in the back of your mind. Having said that, we've used some pretty conservative assumptions in our MPVs. We're using 11.5 Australian dollars a gigajoule for the domestic project, and 13.5 Aussie dollars for the LNG project. So I think we're conservative there. There's always going to be a geological risk, given the fact that this project has not been drilled out to any great detail yet. I think you could probably point to 5 or 6 wells here being able to give some pretty good indications of consistency across the reservoir, but we need to see more wells to be more comfortable with that. Having said that, with shale gas projects, it's different to what Australia is used to with conventional gas projects. Infrastructure risk is obviously something which people are often concerned about in Australia. Having said that, they signed, I think, quite cleverly, 100 terajoule a day MOU with Gemini on the Northern Gas Pipeline, which runs right past their front door. And it's a fact that in all of the major hydrocarbon projects that we've seen in this country, it's a real build it and they will come mentality. Infrastructure has always been able to get gas to market took for our significant projects. And then finally, there's a technical risk, and that is really around the completions that occur with the lateral wells. They require a consistent level of learning. Each well teaches them a little bit more how to complete the well even better, how to undertake the hydraulic fracturing. So there's risk around that, but we'll get more comfort with that as they drill more wells.
Richard, thank you for your time.
Thanks, Lauren.
You can read the full research report on the Corporate Connect website under Reports. I'm Lauren Hayes. See you next time.